Hi, good evening, and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang. Today, of course, is April the 13th, 2025, and what a week it was. Of course, today we're going to cover about one of the most volatile weeks that I've experienced in recent times. And I'm sure you guys have also experienced it, the wild swing in US equity markets, as well as in the gold market, as well as in the energy market. And of course, we also saw the dollar being reacting quite negatively. So without much ado, let's get started. Now, before we get into the content itself, let me remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products. And the trading of any kind of margin products do carry risk of loss. Just be aware of this. And of course, I'll be sharing with you my views of the various markets, and these are just my views and have got nothing to do with the sponsor, which is IronFX, of which I want to acknowledge that they have been supporting my weekly webinar for quite some time now, and I appreciate their support. And of course, this content has the content of this presentation has not been vetted by any regulatory body, so just be aware of this fact. Now, of course, the week itself started off like any other week, but this week itself we can see a marked surge in volatility, especially in midweek. We started the week itself on a relatively quiet mode, except for the fact that we can see that some of the energy markets has actually been quite volatile. We can see rates in terms of the US Treasury, in terms of the 10 years yield has also been surging. So we can see that a lot of things are all moving all at the same time. And of course, a lot have to do with the reciprocal tariff that Trump has been harping since the beginning of the month. And we can see that since April the 2nd, which he termed as Liberation Day, it is quickly turning out to be a desperation day because the uncertainty and the chaos that has been has been pretty extreme, to say the least. And we can see that from this chart here, you can see the various asset class in terms of the Dow Jones, S&P 500, and the Nasdaq has all been quite wild, especially on Wednesday, which he unexpectedly put a pause on the implementation of the tariff just hours before it goes into effect, and that caused a massive, what I consider to be a monster rally on Wall Street. And of course, we also see that the other asset classes has also reacted. Unlike the previous volatility, this time we saw gold did not come off as a result, but gold actually traded off to a new high. And this is a brand new high, especially on Friday, where market closed at a record high again. And yeah, this is less than a week, slightly over a week of a pullback in the gold market. We also saw energy markets in terms of the crude oil market going into negative $60 per barrel. In fact, at one stage, it went out to just above $55 per barrel before recovering back above $60 per barrel. But the one that has stolen the thunder is not so much on the equity markets, but it was actually in the bond market, in which US Treasuries, I'm not talking about a yield here, I'm talking about the price of the US Treasury has tanked. And there were a lot of rumors that major countries has been selling the US Treasury, which caused the 10 years yield to surge back above 4.5%. So we have seen quite a volatile week, and this is just a recap. Are we going to see more of the same in the coming days and weeks? Well, when he put 90 days pause on the reciprocal tariff, to me, it means 90 days of uncertainty ahead. So it's not necessarily a good thing, but I think tomorrow when the market opens, I think the market is going to react very positively because he did something else. When I say he, of course, I'm referring to President Trump. He has actually taken out certain product categories out of those that he has imposed on China. Now, remember, President Trump has imposed a very punitive 145% tariff on Chinese import into the United States, and we all knew top of the list of products that Chinese sell to the United States are computers and smartphone. Okay, and he has put a pause on that. meaning to say all goods coming in from China as far as smartphone and computers and chips are concerned, they only have to pay 10% instead of 145% tariff. So this is going to be viewed very positively because all the tech stock is definitely going to react to the upside. This was, of course, something that he has actually announced in the weekend when the markets are closed. Okay, so let's go ahead and take a look at what else. Now, this brings up something that I want to share with you, which is trader's psychology. Now, I have the benefit of doing this for the last 40 years, and I've seen wild swings before, but this is a very timely reminder that every traders who have ever traded for some time, whether you are new or whether you have been seasoned for a while, we all have gone through this cycle of mood swing. Okay, now the market is all about moods. Okay, when we have fear of losing, when we have fear of missing out on a trade, and we have periods in which we are winning and we have a state of euphoria, and there are times where we are holding on to a dying position. Okay, so those fears and emotions are all very complicated, and it's actually quite damaging to a trader's psychic. Okay, in the sense that it does a lot of damage because it brings you to the high, it brings you to the drop, and then to the point whereby you cannot function. So I think at the end of the day, it impacts a trader's decision in the marketplace, whether he has to buy, whether he has to hold, whether he has to sell, whether he should keep his position, or whether he should cut loss. So all these are very complicated emotion and action that results from the very complicated emotion. So this is a roller coaster ride, which is as much as possible, we will want try to avoid. But that's easier said than done because at the end of the day, we are all human and we all are creature of the same thing. Okay, we have the same emotional makeup, and of course, sometimes we react very differently. But at the end of the day, as much as possible, we want to be able to control the emotional part of the trading, which is, like I say, easier said than done. Like I say, I have the benefit of doing this for the last 40 years, and I have decided that you need to have a playbook. Yeah, how do I do it? When I was in the army, when I was 18 years old, one of the military training that I underwent was a topic on reaction to ambush. For example, you're on patrol and then suddenly you were ambushed by the enemy. So we do practice that, and the more you practice, the more you can react by instinct because there is no time to think. Because if you think you're dead because you are in a kill zone where the enemies has the superior ground, they have all the kill zone all marked out, whereby the odds of you surviving in ambush is actually not very, very high. But with practice and with constant drill, it actually automate that in the reaction time, cutting out the possibility of you being dealt with in a surprise attack like an ambush. Okay, so I took that psychology into the marketplace, and I feel that over time, these are the four things that has helped me to more or less better control my emotional state when I am encountered with unexpected market moves like what we saw in the past week. Now, one is to plan your day. This refers to a routine that you want to keep. Now, of course, we all have different lifestyles. Some of you are working, some of you are running a business, some of you are doing something else. And for the very few who are lucky enough to do this full time, you still need to plan your day. It would be very ideal, okay, to begin each trading day with a fixed routine. For example, let's say I wake up at 5 o'clock or 6 o'clock after New York close. I want to do certain things, but I want to settle down and take a look at the marketplace as to what market I've been doing for the past few hours when I was asleep. Then I could do that, okay, and that creates a routine that I need to do. For example, before I go for breakfast, I want to do a few things. I want to read all the news. I want to do some basic analysis and then plan the day, plan the trade for the day. Okay. So these are the four things that I do. I plan my day so that I need to know, okay, at what time I want to do what. Okay. And then I want to read all the relevant news that has been impacting the market. I want to know what is causing market to to move the way they did. And of course, I want to sit down and do my technical analysis. If you are a technical guy, of course, you want to know what are the key areas to look out for. And then, of course, you come up with a plan. Okay, so when you have a trading plan, not only must you know where to enter a trade, when to exit a trade, you must also know how to control the risk using a set tools like risk management tools like position sizings. All these will help you because once you have all this in place, you just let your plan free. Meaning to say you don't try to intervene, okay, in reaction to market because every time you react to the market, you are always late. My way of trading after so many years is that I would rather prefer the market to come to me. If it doesn't come, that's fine. But if it comes to me, I'm waiting for it. And I have a certain set of action that I want to take, whether I want to buy, whether I want to sell. And if it works, what I want to do next. And if it doesn't work, I know I will be stopped at a certain price. But that is okay because those are within my control. Now, the only thing you can control in the marketplace is what you do in the marketplace. We have no uh, uh, we have no ability to actually dictate how the market is going to move. Okay, we cannot will the market to move in the direction that we want it to move. But however, having said that, we have full control over our action. Sometimes if you cannot see something worth doing, it is perfectly fine to walk away from the marketplace. Okay, no point taking out a position just because the market is open. So all this that I'm sharing with you right now are things that I have followed religiously over time, and I am a lot more stable right now in terms of emotion, whereby I don't easily get affected by what's happening in the marketplace. Sometimes when you get into a position and the market move against you big time, it would basically spoil your day. Okay, and I try not to allow that to happen because I know the worst case scenario, I will lose how much. I know at any point in time, if I'm wrong, what is the worst case scenario, and if I'm right, what must I do to continue to manage my open position in the best way I can. Okay, but other than that, try not to make decision as the market is moving, especially on nights when there are major economic news or there are certain news release, because those are things that you cannot prepare for, and it is detrimental to the trader's account. Okay, in a sense whereby if you continue to react, you will almost always buy the high and sell the low. Okay, and this is no way to trade the market. Okay, the market right now is a lot more sophisticated, and there are a lot more news right now that is causing market to gyrate very wildly, like what we saw this past week. Now, having said that, I hope this has been useful tips for you. Now, the first, in fact, this past week, there's only two major news. They are both inflation related. You can see that we have the consumer price index. The chart on the left refers to the month over month number, and they have all decreased. We can see that the market expectation for the month over month for the month of March was actually 0.1. It came in negative 0. Okay, negative 0.1, not 0.001. Okay, so we also see that the core, which is taking out the food and energy component for the month over month CPI number, also slipped from 0.2% in February to 0.1, when the expectation was a spike to 0.3. So on that sense, it seems to be a good thing, right? Where the CPI numbers has been softer, but we all have to understand the reason why the US CPI numbers has been coming down is largely due to one major category, which is the uh, 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 the used car sector. The used car sector in the States, prices has for used car has been falling, and it is largely responsible for actually taming the CPI numbers. You can see that all other places, in terms of food, in terms of shelter, they are still rising. Okay, especially eggs. Eggs right now in US is become a price commodity. Okay, because we knew that there was a virus scare, and they have called hundreds of thousands or maybe even millions of chicken, and now they have no eggs. Okay, so basically, these CPI numbers that we see that has been softer. Okay, there is that hidden, how would I say, hidden factor, in the sense that it is due to only one particular sector, which is the used car sector. Once used car sector starts to stabilize and start to pick up, Will it pick up? I have no idea. Maybe it will now that we have this tariff war that's ongoing. Parts will be hard to come by, and maybe used cars will continue, will reverse uh, direction. Okay, so this could be one of the reasons we need to be keenly aware of. Now, the year-over-year number, which is the chart on the right, okay, also saw a dip in the absolute number. In February, the headline CPI numbers year-over-year was 2.8%. Now it was 2.4 when the market was expecting 2.6%. Likewise, for the core CPI numbers year over year, for the month of February, it was 3.1% and it dipped to 2.8 when the market was expecting 3.0. So by and large, if you look at this in this manner, it is definitely a positive, meaning to say that this means that it will, if you look at it just by the absolute number, you will conclude that it will give the Federal Reserve the green light to go ahead and cut interest rates. Lower CPI, meaning to say that the Federal Reserve now has the excuse to continue to cut rates. We knew last year they cut interest rate 4 times from 5.5% to 4.5%, where it currently stands. Okay, but I think the Federal Reserve right now is very concerned because they have the big unknown. They do not know what is the impact of this tariff war that has ignited. Okay, so they want to observe the data for the next few months before they decide. So the nearest and the earliest, I think, that a decision will be made could possibly be in June, in my opinion. Of course, it could come in at anytime earlier if the number starts to deteriorate in terms of the stock market collapsing or the risk of recession actually increase. Yeah, last week I think I shared with you JP Morgan's actually sent out a memo to their clients saying that there's a 40% chance that the US will slip into recession. And then less than 2 weeks later, they did that report saying that the risk of a recession in the United States is 60%. So we can see the condition in which the environment has changed is actually quite rapid. Okay, so nobody knows for sure whether the US or in fact the global economy will slip into a recession. Think the risk is actually very, very high because of all this uncertainty that has come about because of this tariff war. And I think President Trump has not anticipated that the Chinese would retaliate the way they did. And I think the Chinese are playing hardball now. And I think they are beginning to see the effect of their retaliation because on Saturday, President Trump actually took out smartphones and computers away from that categories of products that will be slapped with 145% tariff when they enter the United States. Okay, now they have actually backdated it back all the way to April the 5th. So that is a sign that maybe President Trump has relented. Okay, meaning to say that he has actually stepped down from escalating the tariff war. So if you view it from that point of view, it is definitely seen to be a positive. And like I said earlier on, I do expect tomorrow when the market opens in Asia, it should cause equity prices to get up. Okay, so do watch out for Nikkei, look out for the Australian market, and of course, look out for the Hong Kong market and our regional Asian market like Malaysia and Singapore. Okay, I think it will be largely positive reaction to this latest step down by the United States. Now, the other inflation numbers that was released was actually on Friday. We see the producer price index. Of course, these are wholesale price, and we have the month number, which is the chart on the left. And this is the core PPI, which takes out the food and energy component. And even that has also gone negative. Now we are at the same level as it was in last July. Okay, negative 0.1%. It is as low as we get since then. Okay, for the last 6 months or so, this number has been above 0%, although there are signs that it has been coming down since December. Now, the other numbers, which is the chart on the right, refers to the producer price index year over year. Again, this is the core number, meaning to say that it does not include food and energy component. Even that has also slowed down from a high of 3.7% in December last year down to 3.3, which is the lowest we have seen in the last 6 months. Okay, so again, this is seen to be good, largely good. Okay, but we have to watch out the impact of that recently ignited trade war between US and the rest of the world. Okay, but we will continue to monitor this because I think in the weeks ahead, we're definitely going to see a lot more volatility like those that we have seen in this past week. Now, I want to also encourage you to also post your question if you have any. Post them into the chat box or in the Q&A so I can address them as they pop up. Okay, there's currently one. Let me see what is it. Jim is asking me, I know for CPI month over month and year over year that is more important. Obviously, it's the year over year number that is more important because the month over month is a more recent number. It is definitely more current, but it is also pretty volatile. Now, the year-over-year number is a smooth out average, so that one has a lot more value as we try to see the overall trend. So if you are asking me outright between the month-over-month and the year-over-year data, which one is more important, I tend to lean to the year-over-year number. Okay, hopefully that answer is good for you, Jim. Now, again, we want to move on. Now, there is this Michigan Consumer Sentiment Index. Now, this is bad. You can see the Michigan Consumer Index since the beginning of last year has never been as slow as what we saw, 50.8. It is almost bordering on dipping below 50. You can see the crash, okay, in US consumers' confidence. That means to say that consumers are definitely very, very leery. They are tired. They are frustrated because when Trump was campaigning to be elected last year, he campaigned on the platform of lowering grocery prices. That has not happened. In fact, now that there's a risk that retail inflation may actually surge again. Okay, so but the fact that now we are waiting for data, and data are always delayed because they have to compile it, they have to make sense of it before they can publish those numbers. And by then, it could be too late for some people. Okay, so but everybody could sense that this trade war is definitely not something positive. Okay, while Trump may be claiming that America is winning, but the consumers do not feel winning. Okay, they know because they go to the supermarket every day and they knew they've been hit with higher prices in food, in energy, in elsewhere. Okay, maybe not energy, but in other aspects like shelter, for example. So we can see that the consumers are not feeling it, and that is one of the reasons why they are quite pessimistic. And if this trend continues, we can see that the peak was actually in December last year, very similar to the peak in the CPI, okay, and the PPI. They all peaks in about the same time in December last year, and it has been falling since. So if you have falling CPI, falling PPI, if consumers feels it that things are getting cheaper, they should be more confident. They should not be less confident. Okay, the fact that CPI peaks at the same time as the sentiment, the consumer sentiments, and is coming down to a dangerously low level, okay, it can tip into a negative territory below 50 anytime. Maybe by next month, we will see this number dip below 50, and that will be a negative for the equity markets. Maybe if you look at it this way, but for investors to look ahead, if the US economy is in trouble, assuming the US economy is on the rope, what will the Federal Reserve do? Will the Federal Reserve abandon the fight against inflation? Right now, inflation is now to a point whereby they can actually afford to cut interest rates, but they dare not to because of the uncertainty surrounding the trade war. However, if the economy slip into a recession or there's a risk that the US economy may slip into recession, the Federal Reserve may abandon the watch on inflation and try to rescue the economy. So the most direct way the Federal Reserve can help is to cut interest rates. Okay, so it will create a lot of consequences in other markets. Okay, what will it do to the dollar if you cut interest rate? Will the dollar continue to dip even further? How will the bond market react? Because we all know that the US do not have time, because come June, there is a lot of US Treasury that are due for where they need to be paid out. Okay, not only the interest, but also the principal. So the US Treasury need to borrow a lot of money, and they will ideally want to borrow at much lower rates. Right now, the 10-year is above 4.5%. It will kill them. Okay, because the last time they bought those bonds, okay, was during the when interest rate was almost zero. Now, when all these bonds are due and it's about to mature, they need to roll them over with issuance of new treasury bonds. And if they have to do so at a much higher yield, meaning to say that the cost of financing the debt becomes even more burdensome. Okay, and at this point in time, the US simply cannot afford to pay higher interest, and that's one of the reasons why the President Trump has been upping as far as the Fed chairman is concerned to actually lower rates immediately. Okay, we all know it is impossible, and I think they are fighting against time. So this is the market reaction. The market has actually melted down almost 1,000 points, 10,000 points, sorry. Okay, 9,000 points from the peak. 45,073.63 was December last year. That is for the Dow Jones. It crashed to as low as 36,611 on Wednesday, and then no, to Tuesday. And then out of nowhere, President Trump announced a 90 days pause, and the market reacted by surging and recovering a good chunk of the losses and ending the week on a positive note. And for the month itself, it is actually up almost 5% on the Dow Jones. So that begs the question: is the 36,611.78 that we saw on April the 7th the low of this sell-off? There's a very good chance it could actually be. Remember last week I was talking about look out for some kind of reversal either on Wednesday or Thursday because we had the CPI numbers released. This one was right on time. Okay, but of course I didn't know what would be the catalyst. But the fact the market has such a violent reaction, erasing most of the losses and end up the week on a positive note, and so far for the month, okay, it is already up almost 5%. That set the condition for further upside potential. Okay, but I suspect the worst is not over. Okay, because this drop that we saw uh, the the week before till the middle of this week has been very, very sharp. Okay, so there could be a bounce. Okay, whether this bounce is enough for the market to actually rally all the way back to the all-time high, I seriously doubt. But again, I won't say so for the beginning of May. Okay, for now, I think there is a good chance market may rebound for maybe uh, a, a week and a half, maybe to 2 weeks, and then into the last week of this month itself, or the early part of May, we may see another revisit of the low. But be careful if that's the case, a revisit of the low could be a buying opportunity because it would have completed what I would consider to be a sequence of wave. They have actually completed, and the market may be due for the unexpected, which is possibly a challenge of the all-time high. I'm not sure what will be the catalyst for that. Okay, maybe US and China may finally sit down and discuss. Right now, China is not picking up the phone. We have seen a lot of memes, video being posted on social media about President Trump waiting for his phone to ring. He was hoping that President Xi of China will actually call and negotiate with him. Right now, it seems that the Chinese are playing hardball. They are not taking his call. They are not willing to meet with Donald Trump, and that is causing a lot of anxiety. But by then, who knows? By early May, maybe both parties decided that this is too childish and it's not helping anybody, and maybe they should act like adult and start to talk. Okay, that could be one of the catalysts that may cause the market to regain confidence. Okay, then in the S&P 500, we also saw the same thing, but the gain was actually a lot more than the Dow Jones. We can see on the week itself and on the month itself, it has actually gained 5.7%, erasing a lot of the losses that we saw. The market have actually peaked in the middle of February and then tanked in just 2 months. Okay, you can see that the markets have gone down more than 1,000 points, which is actually quite dramatic for the S&P 500. Now remember, the S&P 500 is a very retail index, so we can see the reaction, the fact that the retail bought the high way past the peak in the Dow Jones. Dow Jones actually peaked in December of last year, but the S&P 500 representing retail investors actually took the market even higher to the middle of February before it tanked. Okay, so we can see that the move in the S&P 500 has also been quite dramatic. Year to date, it's only down 8.8%. There's a very good chance the current rebound from 4,835.04 on April the 7th may continue upwards to challenge the most recent high, possibly around 5,008. We want to see whether market reacts around there. Okay. Talk about the index. I think the most dramatic one is this one. This is the Nasdaq 100. Okay, it has gained for the month 7.43%. Okay, and we are not even through with the month, so we could actually end up April on a positive note, perhaps. Okay, so we have understood that the Nasdaq 100 at one point was losing almost 20%. Now, in just three trading days, it has recovered back almost 50%, which is quite a massive recovery. So if that's going to be a massive recovery, I think there's a good chance the Nasdaq may take the lead this time, because what Donald Trump announced on Saturday is actually very much in favor of tech stocks. Companies like Nvidia, companies like Tesla, companies like Meta, all will benefit from the postponement, okay, of the tariff imposed on Chinese export into the United States in the smartphone as well as the computers categories. Okay, because I think that will be where the market is. That's why you can see the reaction in the Nasdaq 100 has been a lot more pronounced. Okay, what else? Spot gold. Gold once again has traded into all-time high. Okay, so the new high as far as the spot gold is concerned is $3,245 and some cents on Friday. So this is an all-time high. Have we missed the boat yet? This is largely expected. Okay, but I was expecting maybe another week of weakness before the market rebound, but it happened the way it did. So right now, previously when the gold prices falls, when the U.S. equity markets was falling, was largely due to closing out of profitable long position to meet margin calls. That was the logical explanation. But however, that role of selling off profitable positions to cover a losing position in equity markets, I think the role has changed over from gold to treasuries, okay, to US bonds, okay, because you can see that this past week, the US treasury bonds has practically collapsed, okay, and the yield now has been surging. So this is possibly the reason why we can see there's a wholesale sell-off in the bond market, which is even more dramatic than the sell-off on equity markets. Because when you see sell-off in equity markets, it only means there will be less wealth around. However, if there's a sell-off in the bond market, especially the US bond market, that is signaling something even more darker, okay, which it could be a loss of confidence in the US governments. So that is something we will have to watch. And that is also very much in line with what I've always said. The only time gold prices can continue to surge is, of course, the loss of confidence in governments. Right now, after a very chaotic week, we all knew that investors right now have lost a lot of confidence, okay, in the U.S. Administration, in how now the market has a sense that they do not know what they are doing. Okay, this is where the fear is. If this is control and investors have the view that everything is under control, we won't get this kind of reaction. and we are seeing reaction like this, it means that market has already decided that there is no driver at the driver's seat. Okay, so this is a little bit hairy, okay, compared to a regular trading session. Now, in the crude oil market, we have never seen this price for a long, long time, and this one single week have already affected my outlook on oil market because I was really, really expecting the $60 to hold. Okay, in fact, I have actually bought some tentative position in oil market, but the fact the market went down to $55.12, and this is a bit of a surprise because I wasn't expecting it. But the fact it is, it seems that OPEC, led by Saudi Arabia, right now is trying to punish the markets in terms of those cheaters who never keep to the quota. I think the Saudis are definitely aiming at the Russian because Russia is in the middle of a war, and energy products are their main revenue earner, and they have to definitely pump oil to sell. Okay, and I think the Saudis are not happy, and they need to punish those people who never keep to their agreement to withhold production. Okay, so I think the Saudis are in a strong position to actually weaken oil prices by pumping more oil. Okay, and basically want to crash the market. But I think at $55.12, it is as low as it can get. Okay, because for Russia, the euro oil has actually gone below cost, which is something not ideal for the Russian. Okay, so going forward, will oil prices stabilize above $55? We will have to watch. Right now, I think the market has overshot itself, and I won't be surprised there are some short covering in the coming week. Okay. Now the dollar has also tanked. Okay. Now this dollar has tanked in tandem with the equity markets, which is also logical when people are selling U.S. equity markets. Okay, they may also reflect that foreigners may be dumping U.S. shares, dumping U.S. treasuries to the point whereby after they have dumped all those assets, they want back their currencies. Okay, so they will need to sell the dollars to buy back their own domestic currencies. So that could be also one of the reasons. But at 99.01 is the lowest I have seen for quite some time. Okay, so the fact that dollar index has actually tanked is also a concern, but it's actually very much in line with President Trump's desire to see a lower dollar. Last week I did mention the conflict here. While the while Trump wanted a weaker dollar purely to gain a competitive advantage for US exports, he also wants a strong dollar. He also wants the US dollar to remain the dominant reserve currency, and that means a strong dollar. So the two doesn't seems to be in line, okay, but there is the possibility that he may be able to get both. How? Because at the end of the day, I think the president of his economic council, okay, a guy called Navarro, has actually let the cat out of the bags. Okay, he said there are 5 things that Donald Trump actually wanted out of this tariff war. Okay, number one, he has told everybody do not retaliate. So there is a fear among the Biden and among the Trump administration that should everybody gang up and retaliate against his tariff, it will spoil all his game plan. So he keep on saying, do not retaliate. But China did, right? So now China have actually retaliated. It seems that there are other countries that may be on the verge of doing the same thing. Okay. The EU has slapped a 25% tariff on, I think, autos. Okay. So that could be something very dramatic because of all the countries in the world. Okay. Uh, report says that 75 countries has actually went to the United States and said they want to negotiate. But the majority of these 75 nations are the poor nations. They do not have the ability to buy any stuff of of uh, uh, of any value. The one that I think the US are aiming that will want to negotiate is actually China and the EU. So if China play hardball and the EU follow through on the coattail of China's retaliation, it will really, really spoil his game. Okay. The second thing is that he wants people to buy more US products. I mentioned, right, those countries, for example, Vietnam and Japan, they've actually go to Japan and go to US and say, look, our lower the tariff imposed on US imports into their country. For Vietnam case, he said they are prepared to lower it down to zero. Okay, but it's just not enough. So what is not enough? Obviously, they have to buy more US products. Whether you need them or you don't need them, you have to buy. Okay, we all knew in the first round of Donald Trump's trade war with China back in 2019, I believe. Okay, China refused to buy soybean from the United States. So who ended up buying those extra soybeans that China's supposed to buy? Taiwan actually bought a lot of soybeans from the United States when they have no extra need for those soybeans. Okay, so that was one way they see this thing playing out. Okay, so on top of you having to lower your tariff, and I think the US will hold those countries that have actually reacted too fast. Before China react, they have already reacted, say they will do nothing, they will want to negotiate. Okay, so now those promises they make, I'm sure the US will hold them to it. Okay, countries like India may have already may have uh, uh, overplay their hand too soon. Okay, so what happened now is that you have to lower interest, lower tariff to U.S. imports. You have to buy more from United States, and then you also have to move your factories. They want the Vietnamese factories that produce the Nike, the Lacoste, okay, move them over the United States. They want your factory to relocate to the United States. That's number three. Number four is that you have to up your defense budget and buy more US military hardware. That's the reason why he has been telling the NATO nations to actually up their defense budget to 5% of GDP. So the rest of the world will have be forced to do all this, and at the end of the day, the one that will eventually kill off the U.S. economy. Okay, it is the last condition. Number five is that you have to buy U.S. debt. There are, for those who are already holding on to US debt, to convert those debt to century bonds, 100-year bonds. Now the longest long bond is for 30 years. I think the understanding right now is that they're going to launch the century bonds, whereby you cannot trade those bonds. There is no secondary market for it, and there is no interest. That will totally cradle the US dollar dominant because nobody will want to do that. Okay, so these are the five conditions that Peter Navarro has actually let out the bags during one of his talks. Okay, and now the world know what the US is trying to do and what will be the end game. Okay, so there is going to be a lot more chaos going forward. Now, there are a couple of questions here. I want to catch them before I go any further. Anonymous is asking, do I see this recent Black Swan event caused by a trade war is lesser in severity as compared to past during subprime crisis? I think we are in a whole different level. We are talking about dismantling the existing architecture, okay, that the US has built post-World War II. This is even more serious than anything that we have ever seen. We are totally going to dismantle the global trading system. Okay, so this is a lot more serious. So we will have to consider very clearly, even if we have new high in equity markets, we want to be very, very cautious about chasing ever new high. Okay. The other question is, why can't Trump or US call China? When somebody call, and imagine you have a thief with your girlfriend, and as much as you try to call her, she may not want to pick up the phone. And this is exactly what's really happening. It's very childish. Okay, uh, Trump has signaled that he is ready to negotiate, but China is simply not picking up the phone. Okay, so I think China believe that they have more cards to play than the United States, so they are not in any hurry. They know that they can do a few things. Now, when the dollar is collapsing, a lot of people were thinking that the RMB is going to appreciate, but it did not. It actually went down together with the dollar. Okay, so this is something very perplexing. I think China is prepared for a very long game. Okay, So we have to watch this space here very, very closely, because the changes to the environment in which we are facing here is like evolving hours by hours. Okay. Okay, let's move back into the chart itself. Now, this is the bond market. Now, the bond market has actually risen quite a fair bit. You can see that the yield in the 10-year treasury has actually gone quite high, right? Okay, let me remove myself. Okay, you can see the high was actually at the middle of January at 4.8%. Now, this refers to the interest that holders of the 10-year bonds can actually receive. Now, ideally, you want to have lower yield, okay? But there is a panic right now in terms of the loss of confidence in the U.S. administration running of the economy, and the confusion and the frustration of all this tariff war on off on off. I think the market is totally confused and they are frustrated, and they are expressing that through the bond market. They are massively selling. Now, there's a lot of reports and a lot of rumors floating in the market. Who is selling the U.S. treasuries? Okay, some reports say it's the Japanese that are selling. Some say it's the Canadian who are selling. Some say it is the Saudis that are selling. Some say the Chinese are selling. So nobody knows who is selling so much bonds during this past week. Now, the answer will not come. As far as China is concerned, the earliest we can get an answer is at the end of May, where China released their data. For the rest of the world, we have to wait for the US Treasury to release those data. And this data will only come on June 18. Far too late. By the time you know the answer, is already the house is on fire. Okay, so we all know June is a critical period, because nobody has any official number. Some say it's 6 over trillion, some say it's 7.5 trillions in US Treasury. They need to be rolled over. Means come June, as much as 7.5 trillions of US Treasury need to be refinanced. How do you refinance? Because the old bonds that the previous Treasury Secretary Janet Yellen has actually bought, okay, or actually issued, was for short dated bonds. Okay, that means the 3 years, the 2 years, the 5 years. Those are the short dated ones, and they are due as early as June. And there are more coming in July and September. And this is not going to be the end, because come September, there will be a tsunami of corporate bonds that are due for refinancing. So they must get the yield down. That's the reason why I think Donald Trump has been so desperate to the point where he outright is telling Powell to actually cut interest rate now, okay? Because they don't have time. We are already in the middle of April. At most, they have 2 months, maybe less. And if the recent treasury auction is any indication, there is very low bid to ask, we call it, very little demand, okay, which is below the average. Nobody wants to buy. So that would be a problem, okay? In order to encourage people to buy your bonds, you have to offer them something very attractive in terms of yield. So this is definitely not something they want to see, because if they finance their rollover bonds, they are maturing, let's say in somewhere in June, anything above 4% is going to be catastrophic. Okay, it will simply mean they are looking to at least double the interest they have to pay on those bonds, which the US cannot afford at this moment in time. So this could be the bigger worry that we have to look at. Okay, if the bond yield continue to surge, okay, and not come down, it will pose a catastrophic moment. Okay, so we will have to continue to watch, not so much on the equity markets, but on the bond market. Okay, so now this is the point whereby I will take your preference in terms of what you want me to talk about. Now, Lily is asking the latest question. Based on the US dollar index reached history low, meaning the pull out of equities or markets in intense at the moment, if this will create another down for market before in good momentum up. I think there's a very good chance after the overshoot below 100 to 99.1 in the dollar index, there is possibility a temporary low in place, because when the market breaks out of structure. Now remember, before this past week drop in the dollar index, it has held very well at 100. Now that it has dropped momentarily below 100 and then closed back up again, okay? So there is, of course, right now we are nowhere near 100, but there is the possibility this coming week we may see higher dollar risk as US equity markets recover. Okay, so the basis is that if equity markets on Wall Street actually recover this week in reaction to the supposedly walk back by President Trump on Chinese tariff from 145% to down to the baseline number of 10%, like I said, the tech stocks will rally. And if that is the catalyst, then maybe the dollar may bounce. So this could be a good time to consider looking on the on trading trade. Hopefully this is good enough. Let me see if there's any other question. Anonymous asked another question. With so many political time bombs around, can I kindly advise how should we position ourselves? Should we keep more cash? It all depends on your outlook. How long are you holding positions? If you are somebody who's in the equity markets, I would think a more opportune time, okay? If I currently have no position, I'm very light, I want to hold on to my cash and then see what happens in the first week of May, because I suspect the first week of May is going to be pivotal, okay? Because for one, there's a change of period from April to May, and sentiment can change on this crucial change of period. And for all I know, something else may work. Okay, at some point in time, somebody will blink. Okay, if the route in the bond market continues unabated, maybe the US may blink and say, please, let's get together, because if I die, you will die with me. Then maybe both will see that they have a common goal that they can actually try to achieve. Okay, but over the longer period of time, I think the confrontation between these two largest economy of the world is not going to go away. Okay, because the US is very, very convinced that China is going to take away the crown, and they will do whatever it takes, okay, to make sure that does not happen. So this conflict between China and US looks like it's going to be a long-term issue, okay? Whether they can come together and try to find some kind of common ground before what we call the something hit the fan, so to say. Okay, any suggestion? Should we talk about US equity market first, or should we talk about somewhere else? Looks like you guys are not helping me, yeah? Okay, then in this case, I will not waste time. I will go straight into US equity markets, for which I will have to share the MT4 chart with you. Now, I hope you can see this chart here. Let me see. US index, Sam, thank you very much. Jim say, Heng Seng. Okay, I will cover all this, and let's start with US equity markets. Now, as usual, we will start off with the Dow Jones. Let's start with the Dow Jones. This is the Dow Jones. You can see that the monthly time frame, although we are only in the middle of the month, but we can see that the sell has been quite steep. Okay, so based on this, assuming this is not how it will look like at the end of April, okay, there is a possibility that we may get a bit of a bounce, okay, but it's a little bit too late. We cannot see in a monthly time frame, but overall we can see that the bull market is still very much in play. Maybe we can see from the next time frame, which is the weekly time frame. Now the weekly time frame has been very positive. You can see that this sell-off is very steep. Now you note that this is wave one. This is the most aggressive wave, and it almost hit the 2.618, which is a critical, what you call that, Fibonacci numbers. Okay, it hit almost the 2.618 was, which is about 36,200. The low is 36,000, almost 500, right? So we see a bit of a bounce. Okay, so this is how it ends this week. So this on the lower time frame will be very, very bullish. So that's one of the reasons why I think near term we could see an extension of that bounce that we saw from Wednesday onwards. Okay, so the weekly time frame suggests that if this is the most aggressive wave, after this bounce, okay, we should see another low. That means 36,500 may be seen maybe it only need to take out this low marginally to hit 36,200. Okay. Or the other way is whatever the bounce is, this entire distance from 45,153 to 41,756, the entire length can be calculated, okay, from where this bounce pops out. Okay, but for now, we don't have to worry about that. We only need to see the lower time frame, which is, let's say, for example, the daily time frame. We can see that the daily time frame has been seeing the bounce, right? So the bounce has actually happened. So near term, we have a bit of a pullback, okay, but it's not deep enough. But yes, actually meet its minimum requirement because after rallying for 36,000, almost 500 to 41,000 thereabout, there was a pullback to the 50% mark. You can see this bar here, and now it possibly will continue higher. Now to get some kind of sense as to the immediate near-term outlook, we can see that this is a 1, 2, 3. So this is already a corrective pattern. But there is a risk that the high here may not hold, okay, if this thing continue, because the momentum is very, very strong. Even after a pullback to the almost 61.8%, the market closed in this, there was this one single buy here which is very, very bullish. So I have every reason to suspect that maybe they will follow through buying tomorrow, for all I know. Okay. So as far as Dow is concerned, near term, I think it is a possibility that the momentum that we saw this past week may extend into this week for at least 1 week, maybe slightly more than that. Okay. But the window I'm looking at is either the end of this week or the first week of May at most. Now, that being said, I want to show you the S&P 500. Same thing, we don't get to see a lot from the monthly time frame other than the fact that it is very bullish. Okay, so I think for all intent and purposes, we want to go down to the next lower time frame, which is the weekly time frame. You can see the weekly time frame has a major rally. Again, it is very, very short, but you can see that there was an initial wave followed by a very shallow bounce, followed by another move downwards. Okay, so this could be part of that five-way structure. So we cannot see very clearly on the weekly time frame, but again, this is the underlying market is actually quite bullish. So after all that is said and done, I don't think the market is going to crash. Okay, the market may actually come back and revisit this low at some point towards the end of the month or early part of next month, and then followed by a very strong rally. So if you want to ask me whether I'm going to be very bullish on equity markets in the US, I think the first week of May could be very likely the timing. Okay. This is the daily time frame. You can see that there's a very strong pickup. But again, from here, we cannot see if this is going to unfold as a three-way. Because in the initial run-up, we need to see the in the lower time frame a pattern that looks like a corrective pattern. For that, we maybe have to go down to the 4 hours and see if we can see something similar. Yes, we have. You can see this initial wave here. 1, 2. Okay. So we can see a three-way bounce. Three-way bounce means this would minimally would have satisfied the corrective pattern. Okay, but it may not be so simple as just a three-way bounce. It could be something more complex. Okay, I always say that it could be a double tree, meaning two sets of three wave or three sets of three wave, or maybe a triangle, or maybe a diagonal. We do not know. Okay, but based on the fact that it has already unfold as a three wave, it would have minimally satisfied the corrective pattern. But I think the momentum behind it is still there. And of course, this market, when it closed, did not take into consideration the fact that there was that waiver, okay, for PCs and smartphone. Okay, so that will be seen to be a positive news. So I really, really suspect that market will open with a gap to the upside. Now, when we look at the Nasdaq, we also see something very, very similar. Okay, the Nasdaq 100. Here again, we look at a monthly. We don't get to see a lot of details, but basically it is still very, very bullish. And we will quickly go down to the weekly time frame. From the weekly time frame, we can see that the market is underlying strong. We have 1, 2 very sharp drop. This is very impulsive, suggesting that this is possibly part of a five-way. And if the rebound from 7,531 is a rebound, then this rebound will eventually unfold with another dip below this 7,531. over time. Again, I think the ideal time frame will be either towards the end of the month or early part of next month. So again, we can see that there is the possibility of those moves. Here on the daily time frame, we can see that 1, 2, 3. This is a very, very unusual move because it's so strong. Okay. So what we are seeing here, we clearly see one wave with a three-wave bounce, followed by a very sharp move. Okay. So this move to me was totally unexpected. Okay. So we want to see how this thing is going to pan out. Maybe the lower time frame in the 4 hours can give us some kind of insight. Here we can see that this is definitely a three-wave. Okay. Very, very similar to the structure in the S&P 500. Okay. But again, like I said, this closing price did not take into account the latest development in the waiver. So tomorrow will be very exciting. I think Asia and Europe will set the pace. I think I do suspect that the Nikkei is going to get to the upside. So let's take a look at the Nikkei. Nikkei 225. Nikkei do not have such a dramatic move. Okay, there was this dramatic move when they were doing that. Remember the what I call it? What was it? Suddenly my mind went blank. Anyway, there was a very strong rebound from the low of 30,400. Okay. And then subsequently, it could not conquer and retake 40,000. And this sell off wasn't that dramatic. Actually, it's a three wave. So if this is three wave, it suggests that maybe the correction is over for Japanese equity market. Okay, because you can see this is a three wave with just a marginal low. Now, whenever the market take out either a marginal high or marginal low and then rebound, it is always a fake out. Okay, this looks like a fake out to me. The fact that it actually trades out the bare minimum to achieve by marginally taking out the previous low and then rally. Okay, this is to me quite telling. Perhaps the market in Japan is getting ready to conquer all-time high ahead of the other markets. So in the weekly time frame, this is what we see. Okay, three wave did not quite hit equality, but it fulfilled the bare minimum, which is to take out this low. Okay, followed by a rebound. Okay, the good thing the rebound didn't close near the top of the candle for the week. So that leave room for interpretation. But the fact is that after taking a marginal lower market reverse is always very, very very suspicious. Okay? So in the daily time frame, let's take a look at the daily time frame. Here we can see the rebound is actually quite strong. Okay. On Wednesday, the market reacted to the upside, followed by pullback and then attempt to rally again. So can only see in the lower time frame. But I think there's a very, very high possibility the low could be already in place in the Nikkei. Okay. Three wave. If this market doesn't revisit this low again, I think the market is going to go higher rather than lower. So again, you can see the pattern of all three waves. So at this point in time, based on what we have seen so far as of the closing on Friday, the market has already fulfilled its bare minimum. By right, it means the market is getting ready to resume its fall. Okay, but like I said, the new catalyst was only released on Saturday, and the market has no chance to react to that. We will want to watch tomorrow. If tomorrow the Nikkei by midday did not charge higher and started to lose ground by the time it closed, that will be a bad setting for London, and that will be a bad setting for New York opening. Okay, so do watch out how the market reacts, especially the Nikkei 225 by tomorrow midday. I suspect it will open high, but whether it can close high, that is going to be quite informative. Okay. Now the Hang Seng, for those who are trading the Hong Kong market, we still have that classical three wave, okay, followed by a pullback. So nothing much to see other than the fact that this dominant trend is basically bearish for Hong Kong market. Although we have a very, very strong start for the year, but that is not telling us anything more than we already knew last year. Okay, this is a three wave rally. So in a weekly time frame, this is how the market reacted. Touch this high in a three wave pattern, hit equality, and then come off. But it actually required recover quite substantially from the low. It recovered 2,000 points from the low. The low traded for the week was 19,000 thereabout, and it closed the week at 21,000. So it's actually quite strong. And this bar by itself is actually quite a very bullish development. Now there's a gap here. Now the question here is, will the market go and cover this gap? Okay. So there's a very, very high possibility market may go and gun for this gap left behind by the low at 44150. So do watch out for a challenge of this to close this gap early tomorrow. So this is the weekly. Take a look at the daily. Okay. Very strong closing for the week itself on Friday. So a good chance it will go much higher and close this gap. Here I will take away the 61.7. Make it cleaner. Okay. So here we wait. Here we wait. Okay. This gap here left behind by this low at 441 half, which is what? 22,441 half. On the 4 hours, a bound is due because the market went deep into the very deep retracement area at 19,000. So far, the bounce is not aggressive just yet. Okay. What we want to see is it's a 1, 2, 3, but there's an overlap here. So it is three wave. So it is a very corrective wave for Hong Kong. So Hong Kong is not exactly very, very bullish looking, other than the fact that the weekly time frame has a rather uh, uh, impressive closing for the week. Okay, this is how the weekly time frame looks like. This is by right a very, very bullish outlook. So other than the weekly time frame, the other time frames doesn't look to be too bullish, but there's always a possibility the market will continue to go higher to close the gap left by the bottom of this previous week at 22,441. All right. Anybody wants to let me see what are the things that you guys want me to talk about. Hang Seng Index or US markets. How? I don't have the China A50. Okay, so sorry. How is delisting of Chinese stock in the US affect the Hang Seng Index? Initial reaction will be bad because if the new SEC chief yet to come in now, but once it's confirmed, okay, and one of the things that he said he would do is to delist Chinese stock listed on US exchanges. The impact will be negative. If you force Chinese company listed in the US to delist, who will get hurt? Everybody will get hurt. The Chinese company that were listed in the US exchanges will lose the source of financing. Okay, and we all know investors that bought Chinese chips, Chinese shares on New York exchanges are international investors and American investors. So they will also get hurt because suddenly if these companies are delisted, there will be a mad rush for the exit. And like I always say, imagine you go to watch a movie and the movie hall is darkened and somebody shout fire and there's only one exit sign. Everybody was going to run towards the exit and there will be a stampede. So that will be a negative development in my opinion. Okay. So if there's going to be a case whereby Chinese stocks are forced to delist, that will solidify the decoupling between the US and Chinese economy. That will be quite permanent. Okay, so that in itself has very serious connotation. Since we are still in the equity market space, let's talk a bit about the European markets. So far, the European market, as far as the DAX the FTSE is concerned, yeah, it has come off quite aggressively, but not in the same magnitude, at least from the perspective of the higher time frame. Okay, we have 1, 2, 3, 4, 5. Okay, okay, maybe one more high is still needed. But at the end of the day, it is not as dramatic as what we saw on Wall Street. This is the weekly time frame. It was very steep the week before, But this week we have a bit of a recovery, but this recovery is not strong enough. If this recovery had closed anywhere near above the 50% mark of this previous week, entire trading range, that will be something very, very bullish, but it did not. Okay, maybe it will take time to crawl higher. That's why I say maybe we may still see another low towards the end of the month, if not early next month. So in the weekly time frame, this we already saw. In the daily time frame, quite dramatic. You can see that this is a 1-2, this is a very sharp fall. Now, if I do a Fibonacci, this is definitely something in excess of 1.618. Okay, let's just do an estimation. I put this to, looks like 3 to me, honestly. 300%. Visually, it looks like 300%, but I will include in the 2.618. There you get it. It's almost 300%. So in terms of magnitude, the FTSE 100 on the daily time frame is actually quite severe. This looks like a very impulsive move, and we have already have a three-wave bounce. You cannot see very clearly in the daily. Maybe you can see later on at the lower time frame, the 4 hours. Here we have a very dramatic drop, which is very, very impulsive, followed by a three-wave bounce. Logically, it will cause for another dip below 7,531. Okay, but it could, all it needs to do is just do a marginal low, like what we saw in the Nikkei. Let's take a look at the 4 hours. Can we see a three wave? Yeah, we can see a three wave. Okay. So if this is a simple three-wave bounce, that means the market should be getting ready to come off. But again, we will have to see how Nikkei actually close tomorrow afternoon. Nikkei closed at 215. Okay. So by the time market close in 215, the London markets and the European markets should open about 3 o'clock. So we should be able to see some kind of reaction in Europe. How London close or not close? How London fair at midday, which is our dinner time, 7 o'clock. Okay, it's going to decide how the New York market is going to open. Right. So tomorrow is going to be quite crucial. Okay, because all this follow through need to be seen in sequence. Here we want to take a look at the DAX. The DAX does not have a very dramatic move. Yes, it has come off quite sharply from 23,500 all the way to 18,800, quite sharp. But again, the overall outlook remains very positive, technically speaking. So here, even in the weekly time frame, the closing price for the week itself is nowhere near the 50% mark. Okay, it would have been very ideal if the closing price is 50% of the prior week drop. That would be very, very bullish, but it did not. Okay, so we cannot get any reference from the weekly time frame. Perhaps you can see them in the lower time frame. So this is the daily. Daily has turned bearish. The entire outlook for the bearish outlook for the German DAX has turned bearish. Okay, so when you compare this to the FTSE, I think this is definitely a better play if you believe that Europe is heading downhill. Here in the 4 hours, you can see this is also a three wave. And this drop here is quite sharp, right? Maybe I go back to the daily and see if I can see some kind of pattern here. Yeah, same thing, 300%. If I do this, oh, this one is even more than 300%. Well, this is even more severe. 4. And this is definitely more than 4. Wow, almost 4.618. This is the deepest in terms of percentage. That means the German equity markets is in serious trouble because for the market to drop so deep relative to the other drops in the same period, okay, this is by far one of the deepest pullback drop. So it means that this low will almost certainly be revisited. So this bounce, now that we have seen the market has dropped 4.618, almost, okay, it's going to be very interesting to see how it will pick up, okay? So if the market starts to fall below this level at 19,335, it's definitely going to go and gun for this level. Or the simple way to do it is just do a simple support. Okay, this will be the first inkling that the market recovery is over for the German DAX. Okay, I think I've covered enough equity index. Let's move on, unless you want me to talk about something else which I have not covered. Uh, Possible next week we'll have this delist Chinese companies in market rumors might out in the market and shake them. Nobody knows, okay? Because the SEC chairman needs to be confirmed by both the House of Representatives and the Senate. One is he is confirmed, okay? Then we will know, okay? He needs to be confirmed first. And once he's confirmed, then we will know what's the timeline. But by then, if President Trump's managed to get through to President Xi and they have some kind of understanding, maybe this may not happen. So right now, the US is playing, is playing a very, very tough game. Okay. So the Chinese are also playing tough. So both are equally stubborn now. Okay, to the point whereby it's a standoff, which is not good. The world need the two of them to talk. Okay, in terms of the currencies, earlier on I did show you the dollar index. Okay, there is a dollar index here, but they don't have the monthly data. I only have up to the daily data, which is what we see here. Now, this is very suspicious, right? The market take out a marginal low. This is too early to say. Theoretically, what we see here is that we may see lower dollar rate based on the fact that this could be a three wave. If this is a three wave, the bare minimum the market can go to is here at 94.80. Okay, so that means to say that there could be more scope for the dollar to continue to extend lower because the closing here isn't very, very strong on the weekly time frame. So this is the weekly time frame. This is a three wave. It could be targeting much lower price. But I'm always very curious every time the market take out a marginal low. If there is a rebound immediately after a structure high or structure low has been violated, I'm always looking for fake move. So right now there's no visible bounce on the month or on the weekly time frame. On the daily itself, there is no bounce yet, at least not visible. And then on the 4 hours, there is a bit of a bounce. Okay, this is a very strong rebound signal. Okay, so there is a possibility we may see a three-way bounce. But other than that, the overall direction for the dollar for the time being looks pretty weak. What about the other currencies like let's say the euro? The euro is enjoying a moment of glory in the sun, largely on the expense of the US dollars. You can see that this is part of a three-wave rally, potentially aiming for 1.9 to 1.23. The last time we hit 1.23, it has problem staying above. Okay, so the most we can expect for euro versus the dollar is 123 to 125 and a half. That could be the top already. Okay, so if this is going to be a three wave, the immediate target bare minimum is 1.19 against the dollar or 123 against the dollar. So the monthly time frame provide us the roadmap. The bounce up is not a reflection of the strength in the euro, but it's the temporary weakness in the dollar. Okay, three wave, 1.19. Okay, so I think the path forward for euro is actually quite clear. For sterling, sterling is also rebounding. Okay, and if we do this three-way bound, there's a possibility of marking extending beyond 143.75, with the equality level at 148.25 thereabout. So slightly more positive than the euro versus the dollar. in the weekly time frame, the market is more or less still in consolidation. If you look at this entire range since April of 2023, you can see that it's basically sideways. Okay. All right. Let's move on to dollar yen. Dollar yen, you can see that the market is also likely to move in this manner. Lower dollar rates against the yen, perhaps to test a 136.5 to somewhere to 131.20. The market ever dropped to this level of 120, 131.20 is a buyer. Okay, so that will mean that the market comes into these very deep retracement levels. Okay, marked by 131.22. So there's a possibility we may see immediately further losses in the dollar against all the other major currencies pair because there's no sign of a rebound just yet. Okay, so near term, I think the whatever we see in the past week may actually extend a little bit more. What about the Aussie? The Aussie also have a major recovery, and this is very interesting. This is happening on a weekly time frame. Now, this is a bullish development. Okay, the market went down to a new low at 59 cents and closed above the previous week opening price. Now, this in and by itself is actually a bullish development. So perhaps a low in Aussie is already in place, at least for now. Then when we look at the monthly, of course, the monthly pattern is not in place yet because we still have 2 more weeks to go. So it does suggest that the market hit the bare minimum of a 78.6% retracement, marked at 59, 0.5915. Market went down to 0.5914. One tick lower inside this bracket and then bounce. Very interesting. Near term, I think tomorrow we should see continued rally in the Aussie because I think it's a very strong recovery on the daily time frame since Wednesday. And for the last 2 trading days, on Thursday and Friday, the market extended even higher. So there's a very good chance it will extend higher. But the key level to watch will be 0.6430. Market must take out this high here for the market to eliminate this daily time frame bearishness. So the key level to watch 0.6430. So no need to see it. I think the 4 hours is quite clear. The momentum is actually very strong. Near term, watch out the 4 hours. No need to go to 0.6493. We can see 0.6393. That will be the first inkling that the market has flipped. What other markets you want to see? Kiwi dollars for those who I know consistently been asking for Kiwi. So Kiwi also hit not a new low like the Aussie. There's no trading of new low. The low here was traded at somewhere in the early part of 2020. 0.5467. The low this past week has been 0.5485. So it did not take out a new low. So this is in and by itself actually a bullish development because this is the highest closing, assuming the market close here. Okay, it's the highest closing in 5 months. So there is a possibility the Kiwi may also hit a bottom. This technically is a very strong development. Can you see how the market closed and way above all the closing price here? And this is just marginally below the closing price of December last year. So in one week, it recovered back all the loss for the last 4 months. Very, very impressive. So the Kiwi may be setting the stage for higher prices going forward. Now, among all these sell-off in the dollar, obviously the Swiss franc has benefited. You can see the dollar versus the Swiss has actually more or less have a very, very sharp move to the downside. Meaning to say, the Swiss franc is currently acting as a safe haven currency. When the dollar is no longer safe, people move their money to Swiss francs. Okay, so you can see the Swiss franc has been relatively strong. Now it's 81 cents to a dollar. Okay, how do I say? 81 centime against the dollar. This is the weekly time frame, very, very sharp. You can see the acceleration from the previous week. This week we can see the market take out the 0.81. So definitely there's a shift to the Swiss franc. Okay, I don't think I need to show you any more currency pairs. I want to know what else you are asking me. Uh, Lily is asking, could I please explain VIX index compared to dollar index as beginning of April? It looks like both relation works closely. Unfortunately, I do not have the VIX index on this platform, but I can roughly explain to you. VIX index, as you all know, is a fear index. If the index is elevated, it means the amount of fear by market participants is actually very, very high. Okay, and when the market is fear, when the VIX index is high, it means people will leave risky assets. They will go into what I call risk-off assets. When you have fear, the instinct is to move to a safe haven, to find a place where you can anchor down. Okay, and for financial markets, it means a pivot towards less volatile market, such as gold, such as bonds. But this past week, we see how the bond market collapsed. So the bond market did not provide the safe haven status. In fact, it was the source of the fear. So the fact that people have pivoted to gold, so gold now is becoming the choice, the product of choice for hankering down in the meantime where they are trying to figure out what's really happening in the financial markets. So when the VIX is high, it got nothing to do with the dollar. Okay, it's just that they are going to de-risk themselves, getting out of very risky position into a risk-off situation. So this is all about it. Either you move your money to the Swiss franc, like what I've shown you, the dollar Swiss chart, okay, or you move to Japanese yen. So these are the two traditional currency in which people associate to a safe haven currency. The other one is definitely gold. Okay, so this week itself, we can see how the market has been playing out. I did not see the VIX index, but from the reaction in the bond market, I can sense the fear in the market. Okay. Raja Kumar is asking, any possibility of dollar to go up? Yes, of course. Long term, the dollar is up. Okay. Do not be confused with what's happening now. Long term, the dollar needs to go up. Why I say that's the case? Because from May onwards, there's a high possibility something bad will happen on the geopolitical front. Okay. US appears to be positioning assets to attack Iran. If that actually happens, okay, the dollar will rise because capital will flee, okay, and it could actually cause the entire structure to flip. So if there's uncertainty in the geopolitical front, especially a hot war between two major nations, then that will be something to watch. The dollar is technically strong if you look at the monthly time frame, okay? And the fact that it is coming down now does not reflect uh, the situation if there should be a change in the geopolitical scenario, okay? Yes, I'm long-term bullish dollar. Swiss franc, how strong can it go? Let's go back to the Swiss franc chart again. Okay, we are at the Swiss franc chart. Okay, based on weekly time frame, I think it should actually be trading above 75 cents. Okay. The bottom here that must not break, okay, is this level here, 0.7574. Okay, maybe you make it easier for yourself, 0.7575. So this level must hold. If the market continue to sell off, the dollar sell off against the Swiss franc below 0.7575, we will have to refer to the next higher time frame, which is the monthly time frame. Okay. And for this, it will be somewhere at 0.70. Right now, the market seems to be accelerating, okay? Whether it will continue to accelerate to the downside, I think the first clue will be the weekly time frame. 0.7575, if that one is taken out, then look at the monthly time frame. So those are intermediate targets. Can we see something nearer in the daily? The daily has already turned bearish for the dollar. So that means the Swiss franc is technically bullish on the daily time frame and lower. Anything above the weekly and the monthly weekly you have to look out for is 0.7575. Is this level is also taken up by the dollar? Okay, then you got to refer to the next best timing is 0.7070. Okay, hopefully this can provide you with some yardstick. Uh, okay, gold. Yes, I will cover gold. And Lily is asking, could I also comment on cocoa and palm oil? Unfortunately, I've not been looking at these two. Maybe I can do that for you next week. I have not looked at these commodities for quite some time. If Swiss franc is considered a safe haven, the Swiss equity market may be a good market to pump the money. Yes and no. Okay. Now what's happening? Okay, what I'm more concerned is that all this uncertainty surrounding major equity markets is going to create a lot of stress in the banking system. Among the weakest hand, the weakest link in the banking system is actually Swiss banking. Remember, Credit Suisse was absorbed by UBS, and these two are not really marriage. It's like a shotgun marriage. Okay, and UBS has their own set of problem. Now they have to take on the problem left behind by Credit Suisse. So the entire Swiss banking system is not very stable. So if you were looking at it from the perspective, uh, I do not want to get involved in equity markets in Switzerland. This is just my opinion, okay? But I'm not too bullish on Swiss equity markets. The currency maybe for now, okay? But again, we have to watch how this thing, because it creates so much stress. And the banks are the one with the liquidity. If the liquidity is affected, okay, it will negatively impact all other markets. So you can see the knock-on effect. All this stress must be contained. If this thing continue to decay, like what we saw in the past week, then we could be in for a very rough ride because all these are interconnected. Okay, because it will impact credit, it will impact reserve, it will impact banking stress. All we need now is one major bank to fail, and it will have a domino effect. Okay, because the stress is already quite unbearable. All right, let's go into commodities. Let's go into gold. Now, gold we knew is at record high. Okay, this one comes a lot earlier than expected. I was expecting to have another week of lower prices. So anyway, I didn't quite manage to position my long I wanted to buy, but market is already at 3,245 per ounce. So it looks like I will have to wait for the next pullback. So money time frame only confirms what we already knew. The market is very, very bullish. The weekly time frame is also the same thing, very bullish. There's no bearish sign whatsoever. In fact, all time frame are bullish. This is as bullish as you can get because it is across the board. The daily is bullish, so is the 4 hour. So everything is bullish. There's no significant pullback. Now, this is one of the most aggressive move I have seen. So any kind of pullback will be quite shallow because this looks like to be another 5 way internally and another 5 way. If there's going to be another pullback, at most, I think it's going to be about here. Let me add in this one. This is the bare minimum retracement. Assuming Friday's high is the high for now. So if there's going to be any pullback, I don't think we can expect more than a drop back to $3,177.20. Okay, so do not expect a sharp pullback. At the bare minimum, this is the one. Assuming the high here is the absolute high for this round. So if the market continue to go higher, extend this Fibonacci retracement to the new high, and take your bearing from there. So the gold market is definitely supremely bullish. Now, this is the silver market again underperforming. This is a three-wave pullback getting ready to rally. Now, you can see this closing here is very different. This closing here is telling us this is a weekly time frame. This closing here is more than a 50% mark of this previous week trading range. So it closes near the high of the week's range. So it has all the ingredient for a extended rally. So for those who wants to go into silver because you miss out gold, maybe it may be a good option. Okay. And this is the daily. Daily also crossed very, very strong. Okay. The fact that this is a three-wave hit equality and bounce is very strong because there is a break of structure here. $28.73 market break this marginal low here with $28.34, followed by such a strong closing for the week. It's very, very telling. Okay. So whichever way you look at it, I think silver will be a good market to be in this coming week. Okay. If this end up to be a five-way bare minimum, this is internally a structure. If this end up to be a 1.618, okay, we are looking at a move to $33 and beyond. $33.22, thereabout, not accurate. So this could be the target for this move. If this is the case, after it hit this level, wait for a pullback and then another challenge of a new high. And ultimately, at the end of the day, we want this high at $34.46 to be taken out for the entire market to turn near-term bullish. Okay, let's look at oil. Oil have a big week. Okay, oil has turned long-term bearish. It was actually really, really attractive to be buying the dip. But this move here by this week to below $55 damaged the bullish outlook. And now the market has turned bearish. So, but I'm very leery to sell oil. Okay, I'm just waiting for the market to stabilize because I'm super long-term bullish on crude oil. So here on the weekly time frame, you can see that the market has a low at $54.76, followed by a rebound. But this rebound here is not strong enough, but it is encouraging on the lower time frame. Weekly time frame is not particularly bullish. Okay, it does not look like a classical reversal. Then on the daily time frame, it's also not particularly bullish. Let's check out the 4 hours. 4 hours looks like it's a lot better looking than the higher time frame. So at a bare minimum, again, using the equality move, if I'm going to be buying crude oil near where it is close at $60 or $61, I could possibly gun for, at a bare minimum, equality move, 1:1, which means I'm possibly looking at $66.38. So this could be a good target. Currently, market now is just under 61 cents. There is a good $6 upside potential here. Okay, let me see what else has been asked in the interval. Anonymous, just to make sure I understand correctly, my opinion is that early May is very important to watch. If geopolitical conditions worsen, fall in equity may resume. But yes, I have to correct myself. Okay, what the rebound we see in equity markets, I suspect is going to continue for the next week to next 1.5 week. And by the end of the month, I think the market will come back again, take out the most recent low. And the first week of May, I think could be an opportunity if the market did register a fresh low, do not sell below that low because that low could be a trap. Okay? Because the market has created a low before this week's bounce. So if the next decline that takes out the most recent low this past week, that could be a trap, what I call a bear trap. Once the market take out this week's low, go down to a lower time frame to look for reversal because that could be the buying opportunity for this year. Seriously, I think the market may go into a new high again. Okay, so what the catalyst, I do not know, but technically speaking, the first week of May is going to be maybe perhaps the last chance to buy equities for this year. Okay, So, okay, this is my opinion. So you just watch how the market reacts. Okay, Dennis is asking, what is to be expected of gold price to top? Okay, let's go back to the oil gold price. Right now, we are in uncharted territories. So right now, there is nobody knows where the top is. But if you look at the monthly time frame, I have a target at 3,005 on the monthly time frame, which is the highest time frame. 3,005 could be a long-term target, but if you are not going to hold for that long on the monthly time frame, assuming this is not even the high yet, I'm using this as a guide, 3,008. So anywhere between 3,005, 3,008 could be a target. But right, but like I said, this high here has not resulted in two more lows. Okay, so this one is only tentative. So I think for the time being, we can safely take 3,005 as a target. Nearby, if I have to give you an opinion, the nearby target is 3,353. Okay, which doesn't give you a lot of room to maneuver, maybe another $100 more before it hit some kind of profit taking. But if you're going to be a long-term holder of gold, 3,005 is actually quite achievable. Hopefully, I've answered your question, Dennis. Okay, let's go to the last category, which is Bitcoin and the rest. Now, Bitcoin has not really done a lot. Okay, among all this chaos that we see, the big digital assets has been relatively no fanfare. Okay, so we have a new low this past month. Okay, this past couple of weeks at 74,500, but nothing dramatic. This week we have a new low, 74,500, followed by a bounce. Again, we have a marginal low compared to 5 weeks ago. So again, once the market take out this low, it go back up again. So this could be another fake move. And this could be probably better appreciated in the lower time frame. So this is the daily time frame. Okay. We have a move, three wave, hit marginally beyond equality, followed by market taking out the most recent low and bounce. So there's a good chance that a temporary low in Bitcoin may already be in place at 74,500. This is the most current price, 83, almost 84,000. This was decidedly higher than what I saw this morning at 82,000. So we can see that Bitcoin looks like it's forming a base. Okay, three wave move followed by a bounce. So what we saw on Wednesday is also in tandem with the recovery in risky assets. So buyers could be back, okay, based on this action here on Wednesday. Okay, but it's not as strong as a push just yet. Maybe it's waiting for something to happen. Okay, if I have to give a guesstimate, near term, this is the 4 hours. So near term, what are the potential? I think it looks like a 1.6 on it. Yep. So this is potentially part of a five-way structure. Market has done 1.618, a pullback no higher than this high here. No, a pullback no lower than this high, which is 22443. Okay, 81,240. Okay, if a pullback does not result in a low lower than this 81,224.43, then it's getting ready for a five-wave unfolding, meaning to say once it's stabilized, it's going to rally again beyond this high here at the bare minimum, perhaps targeting 88,700 because this is the nearest high. Okay, that will be completing a five-wave structure. Then ideally followed by a larger degree three-wave. Okay, and then a more aggressive rally. So this is my outlook for Bitcoin. I think temporary near term, we should see some kind of pullback, but it's going to be a pullback that may actually be above 81,250. Ethereum. Ethereum is still falling in the monthly time frame. Ideally, the Ethereum should continue to go lower, below $500, perhaps targeting $500, because the structure is very different. Ethereum doesn't look very strong to me. Could be a very large degree three wave. Yeah, it could be targeting somewhere near $200. If that ever happens, there is a buyer. Okay, because the long-term structure is still very bullish for Ethereum. That is based on the monthly time frame. Is there any sign that the market has buyer coming in? Perhaps this week we have a doji. Now this is a doji, meaning market got down to a low of 1,384, followed by a doji. Now doji doesn't mean anything just yet, unless the following few weeks we see a extended rebound. But it is a good sign. So stop selling the digital currency for now because the major coins appears to have found some kind of footing. Okay, this is also very bullish. This one is also on Wednesday. That's also Wednesday. Wednesday market hit a new low, close as a bullish engulfing bar. This is a very bullish development. So I think I've seen enough for digital asset. I think there's a good possibility a low may be in place. Let me see what else is in the question Q&A. All right. Anything else you want me to cover before we close the session for today? Just remember at the end of this month, let me check what's the calendar. I think end of the month on 30th, I believe it's 30th. 30th, which is a Wednesday. I'm doing one webinar for RHB Malaysia. So if you guys wants to join in, I'll be talking about mm, the major equity index, the E-mini, the micro E-mini for the various equity index in the States and gold as well. So you want to know a little bit somewhere in the midweek because I will see you 2 more Sundays, followed by my webinar on the 30th, which is a Wednesday. So if you want something in between the week itself, you're more than welcome to register. I don't have the login yet, so if you have to look out for RHB Malaysia, it is look out for their advertisement. Okay, guys, thank you very much. If there's no further question, I will end my session here. And thank you all for the time. And I hope it has been a great session for you. Thank you. Bye-bye.